welcome to the Real Men of Real Estate. I'm your host, Steve Matley, president of Coast to Coast Equities. Today we're going to talk about that mysterious thing that shows up in your real estate transactions, title. We've all heard it, we pay the fees, we see it on our closing statements, we have no idea what really it involves. We have a group today that's going to talk about what title is, what title insurance companies do, and what happens if you don't do it right. To my right, we have Brian Fox. Brian Fox is a realtor with Fox Real Estate Group out of Orange County. Welcome, Brian.
Thank you.
Next to Brian, we have Patrick Kappel. He is of Reef Point Realty and Reef Point Investor Club. Welcome.
Thank you.
And on the end, we have our title expert today. Fred Eckert is with Chicago Title out of San Diego, and he is here to fill us in on what title's about. Welcome, Fred.
Thank you, Steve.
So let's get right to the point. What is title? When I hear title insurance, I'm assuming that you're making sure that no one's going to steal the title, Real Men of Real Estate, from us. Is that right?
No.
No?
So when you buy a home, what a title company does is this. They make sure that you're going to know before you buy what the tax situation is, whether there's any suits, judgments, or liens, whether the people selling you the property are the actual people that own it and can sell it. We're also going to look for easements. We're going to look for, as I mentioned, judgments. And if we find those things, we'll put that in the report. And the report a buyer should be looking at. They're given it to by escrow. I always say, I don't think a lot of buyers really look that over well. So feel free to call that title officer. That number is on that report. You can always call that title officer. And they're not going to give legal advice, but they will answer questions about what it means.
Okay, so the title insurance company is going to tell us this information, which means you have to research a lot of historical information.
Correct.
About the property.
Correct.
Now, Brian, you're a real estate agent. You deal with title. How involved do you get in this process?
Well, to be honest with you, I mean, unless there's an issue, not very, because it's just so boilerplate at this point how they do title and research it. If there's an issue, yeah, all hands on deck to figure out a way to get out of it, because typically the issues would have already been solved by now if they were easy. So we did have one issue that it came up. We were talking about this earlier, is that I had a client who was trying to refinance their property, and this was back when I was in lending before real estate, and they had an old lien of $30,000 on it for a bank that had long gone out of business 20 years ago. And it was never reconveyed. Reconvenes means saying, yes, they paid us our debt, we're good.
It's a recorded document.
Yeah, recorded document. So that never happened, and the company's been out of business for 20 years, and we were supposed to close. And of course, these issues only come up the day before you're supposed to close, all of them. Mm-hmm. And so we got something special called a surety bond, basically getting insurance on the insurance, which is very interesting. That happened probably 15 years ago. I've never seen it or heard of it since. It never comes again.
It's not uncommon. There are reconveyances that are not done. And what I always tell folks is, if you can do it, if you have a copy of the note that went along with the deed of trust and you kept it, because it's normally not recorded, correct?
Yeah, correct.
So, but if you keep a copy of that note, so it has the terms and everything in it, with that, if it shows when the due date was and so forth, if it's an older reconveyance or no reconveyance, we can use what's called the ancient mortgage rule and try to clear that based solely on the fact that we know when it was supposed to be paid off and maybe the person has records of what they paid. And I always say this, if you're paying a mortgage, keep records of that, because if it comes down to it and we say there's a 25-year mortgage and it was for 30 years, you've paid 25 years of payments and you can prove that to us, that's a good thing, because then that surety bond can be a lot less.
Yeah, I don't think they told us about that rule unless that happened in the last so many years, but it wasn't they never discussed that. They said, well, you can get this thing. Yeah, I called these guys, and it was not cheap. I think it was like $3,500
pretty expensive
for the surety bond, and again, never saw it since.
Steve, if I may, one of the things that I think is very important, and you highlighted this, Brian, about how things come up at the last minute, and one of the reasons for that is we do a statement of information. So we issue the preliminary title report, and the typical way the system runs is escrow, towards the end of the escrow, they'll come back, get a statement of information from the buyer and the seller, and then they give it to us for title, and we clear it. And the problem is suits, judgments, liens, revenue recovery liens, those kinds of liens, if you had a child support lien, those usually only appear against your name, not the property. So when we do that, that's why things pop up at the last minute, like, oh my God, I got an IRS tax lien. So if you get the advice for agents and for buyers, get that statement of information into escrow as soon as you can, and that way if there's any problems, we'll know about them.
So Fred, I work with both buyers of condos and houses and also multifamily properties. Can you walk us through what should be expected on the title for a condo versus a single family house versus a multifamily?
Sure. So title companies, if you look at the contract for title, it'll say something about we'll issue a homeowner's policy if available, correct? And a homeowner's policy is the best coverage. And the way of explanation of this is all title companies have a homeowner's policy. It's a standard form, meaning it's either done by CLTA or what's the other one? I can't think of it. That's California Land Title Association. But it's a standard form, so all the title companies follow that. So it's not like one title company might offer you something different. So that being said, that is a typical policy we give to a buyer who's going to live in the property, correct? And it has a lot of features like building permit violations. There's a inflation inflation factors. I actually have a flyer outside on it. But in a condo, a lot of that building permit violations would not really apply. Walls and borders and fences typically don't apply. So the coverage is there. And if I was a buyer, I'd probably get the homeowner's policy just to make sure I had the best coverage available, because it's only 10% more than a standard policy.
So now, what besides services, what kind of rates do we look at? What do we pay a title
So
insurance
rates
companies?
are regulated by the, you have to file rates for the insurance commissioner. We're actually, I believe, going to be filing a veterans rate.
So a title company is actually an insurance provider.
It is insurance provider. We are all title reps now, ever since it was called Senate Bill 133, we all have insurance licenses, and those can be stripped from us if we go off of our filed rates, or if we do anything that's an inducement for business, right? So we are an insurance company. The rates are, I would say, for the most part, the rates are pretty standard across the board.
Yeah.
They really are. I think what you'll find is, where I see the big variance is the strength of the company backing the policy. Because when it comes to a claim, most people don't know if you're using, say, an agent. Title agent would be, say, something like California Title or Equity Title, they're part of Coldwell Banker for Equity, and California Title is part of Berkshire Hathaway. Those are not title insurance companies, they're title agents, so there's another company that backs those policies.
So they're outsourcing that title research to someone else.
Correct. So if there's a mistake made on those, you don't go back to that, you wouldn't go back to California Title or Equity Title. You'd have to find out who the underwriter for that policy is and file a claim with them. So that's a little bit, I think most people should know that, and they should know what is the financial thing, how can these people pay this claim back. I mentioned that because of a personal story, very quickly.
Okay, well, before we get in the personal story, we got to go to a break.
Okay.
We'll start with that when we come back. Don't go away. Fascinating topic on title. We're going to get deeper into what happens when title goes wrong when we come back. This is Real Men of Real Estate. Don't go away.
Hey guys, how are you today?
Good.
I'm here to talk about how with technology you can make amazing worlds. Come with me. My team and I bring the Halo world to life.
Is that you?
That is me. I wasn't a math genius and I knew nothing about coding. But you guys do. You guys have the power to change things.
I want your job.
I want you to have my job.
Opioid dependence can happen after just 5 days. Know the truth, spread the truth.
Welcome back to Real Men of Real Estate. I'm your host, Steve Matley. We're here talking today about title. We're with Brian Fox, Patrick Kappel, and Fred Eckert, and we're talking title. And when we went to the break, Fred was just about to share a personal story of what happens when title doesn't work out. Fred, go ahead and tell us what happened.
Very quick, when I bought a house in 1981, that was about 11 years before I came into the title business. I was in the Navy, didn't know anything about title insurance, as most buyers don't. I found out after I started working for Chicago Title, I said, I better check on my own policy. Well, it turned out the small title agent that had issued the policy went out of business, and the underwriter, who was also a smaller underwriter, had gone out of business. So I actually called and talked to the guy that was going to be like receiving the proceeds when it was sold. He told me that I could probably expect maybe 5 to 10 cents on the dollar if I had a claim. And so I asked the agent why he recommended that, because Chicago Title gave me a brand new policy and it was great. I asked him, why did you recommend this small company? And this is going to sound odd, but he said, well, it was a good-looking girl with,
Oh,
it was an amazing comment, but that was how it was. And I think to some extent, you still see that. Most of the title reps you see hired they're good-looking people. I'm not part of that, okay, but, good-looking lady, good-looking guy. So
Don't sell yourself short, brother.
Okay.
Yeah, let's not get weird.
So I just say it's important for people to know who they're using and what their financial strength is.
well, as any good author knows, a sexy title always sells better,
Yes, sir.
right?
Yes,
So-
exactly.
All right, so we have these kind of things happen that come up. So that gets into the issue of what happens when there's coverage gaps. I had a property where we took down a property up in Northern California, and this was third to fourth generation family, been passed down from the original farmer to siblings and then cousins of cousins and those type of things. A member of that extended family who married into the third or fourth generation family created a big problem when we found a little glitch in the title and didn't know there was a piece of that hadn't been cleaned up on the old farm. So this was a big problem that turned from title. So what happens when we have these little coverage gaps? Besides your story, what can go wrong?
All right, so when you say coverage gap, we're going to talk about something called an uninsured deed, which is I quit claim a part of my property to you, but I don't have it insured by title. The more of those you have, the more a title company has to look and probably get indemnity agreements and so forth from some of these other people, because we have this uninsured deed, and we have to make sure that they're not holding us accountable because they didn't use title insurance back then. Does that make sense?
Okay, what a title insurance does is when I have one of these people come out of the woodwork and they've got a claim that they say was never satisfied going back 4 owners or something. If I had a title insurance policy, that company has now insured me that I'm not taking that loss. They're going to cover that loss for me because they guaranteed that.
They put in a claim and say, you didn't spot this particular thing. That's what title companies do. We look for things, we give a report. In that report, if we show something, then you can't file a claim against it because we've given it to you. On the other hand, if we don't show something, we don't show an easement, we don't show some prior owner who has an interest, then that would be a claim.
Real quick, just so we could say, indemnification and what was the other term you used around quick claims to make sure that you were making sure people couldn't come back to you? I just want to make sure we explain that properly. So indemnification, can you just say what that is?
Well, indemnification is usually what we ask for if it's an uninsured deed. In other words, so an example, this is a great example. This happened in Coronado. Father transferred a property to his son. At the time, the property was worth about $850,000. It's probably 15 years ago. And he transferred the son because he had tax liens, IRS tax liens on it. And the tax liens totaled about $1.2 million. And he thought by transferring the property to his son, without the benefit of title insurance, that those would all be wiped away. When the son got the property, he couldn't do anything with it because there were too many encumbrances on it, meaning the IRS had a claim of way more than it was worth, so he couldn't do anything. Couldn't do anything with the property.
So you mean you can't make your tax liens just go away
You
with
can't.
fancy
You can't.
paperwork?
You can't.
I still, and this is totally off topic, the amount of people who think the IRS isn't watching is great.
amazing.
I still think it's amazing how people, they don't think they're going to get their money.
People that give advice and consult on how you can get around those things, and it's phenomenal that anybody thinks that would ever work.
And remember, I go back to this thing, when we look for the person's name, that's where we find the IRS tax liens typically. Because if you own 25 properties, they're not, what they'll do is they put it against the name, so every property you own, if you want to sell it, they're going to get their piece.
What's great about that is actually I was selling a house. This is, it was a situation. It was a short sale. It was during that time. So I had a short sale. The buyer was scheduled to buy it 48 hours before we were supposed to close escrow. That's when the IRS put the lien on the property. So it was like we were actually closing. And it was 30 seconds, like literally I'm waiting for the call of recording.
Right.
The call I got was, we're not recording. And I had to, luckily there is an IRS office local.
Right.
So it took another 30 days to get them to release it because I'm like,
extends
you're
things.
putting a lien on it, but there's no money in it. She's not getting any. So that was the only reason they were able to let it go.
Right.
Now, Patrick, you work with a lot of clients that are doing multifamily type stuff,
right.
investment properties, which gets a little trickier because they're not living on that property. And so they may not even be aware of some things going on, being they're probably absentee owners. So what kind of problems have you run into that relate to title?
That's right. So I noticed between single family and multifamily, a lot of time the multifamily is going to be held by a different type of entity as well.
An LLC or something?
LLC, LPs, family trust. And as you mentioned just earlier, Fred, sometimes they've been moved multiple times within the same family without having actually been sold. So I've noticed on multifamilies, you just got to look with a bit deeper of a magnifying glass to find something that might stand out.
And there may be deceased members of the family that were
that
part of
happens
a
all the
trust
time.
that never got taken off the title, and things never got figured out, and that becomes probate issues and all kinds of problems that come up.
Exactly.
The best thing people could do for us, if it's going to be in a trust, for example, or a limited liability corporation, is to make sure that they have those documents available so we can see who's authorized to sign to sell the property. Does that make sense?
And then another thing to keep yourself out of hot water with title is a lot of the market lately has been driven by these fix and flip type operations. That means you probably have lien holders potentially if things weren't done correctly, meaning every contractor, every architect, every supplier that had anything to do with that, if they weren't paid properly and if they filed their preliminary notice, has a lien on that property, which
Could
will
have,
affect
yes.
the title.
Right.
And if you're trying to flip that, that's going to be a problem,
Right.
especially if you picked it up and found out the previous owner tried that at the last remodel 20 years ago and didn't pay some people.
Right. So I would tell agents this, and I would tell sellers this also. If you can give that statement of information to that agent, even on a listing appointment, it would not be too early. Take it then, let the title company search it. You're going to know, and maybe even the one that you talked about, you're going to probably know that there was an IRS tax lien on it because when we search that name, then we find it. So we do what's called a general index search to look for suits, judgments, and liens. And that, I think, is pretty common that they wait till escrow asks for it. But my suggestion is get it done early.
One question that comes up too often is what's the difference between the owner's title and the lender's title policy?
Okay. So the owner's title policy is typically paid for by the seller in Southern California, typically paid for by the seller, and the buyer pays for a policy that protects the lender. So the lender has a policy based on the loan amount so that if they have to take the property back, they basically say, hey, I know I have clean title for this. Whereas the buyer, I think the biggest thing for that is it's going to carry with you as long as you own that property, which is what I mentioned to you and my own personal thing. That policy had been issued 11 years before, but I only found out it was worthless after 11 years.
And that being out of business, you have no recourse on that, really.
Well, the recourse I was told I could have, because I wasn't in the business I was in the business, was told I could have probably gone back to that original seller or to the agent and said, hey, why did you recommend this company that was worthless?
If they're still around and if they have anything worth going after,
Correct.
too. That's a whole different question.
Yes.
Right. Okay, so we get the policy, we look through it, we try to find all the problems with it, but this title does other things too. You mentioned easements, and I remember requesting plotted easements
Yes.
for a title. So explain a little bit what that's about.
All right. Well, we talked a little bit on a previous show. So easements usually are around the outside of the property. And example, a sewer easement, a power easement, maybe it's a SDG&E easement or something like that. They might run across a side or they might run across the back. In fact, if you think about it, when you see poles on the back of a property, that is an easement that they have because it's poles across your property. So the best thing I can say is when we do those and they're plotted, you want to make sure that there's not easements that are going to impact your ability to, say, cut across it. Because an example would be, if I put a pool and there's an easement that runs through the middle of my property, then I better be aware that if they have to work on that easement, I might have to dig my whole pool up.
Okay, so that can be pretty scary. We're going to come back, and when we return, we're going to wrap it up talking about title. I have a couple more questions to ask, and we're going to hear from the rest of our panelists and some final thoughts. This is Real Men of Real Estate. I'm your host, Steve Matley. Be right back.
Put the keys down, Kevin.
But I'm gonna drive home.
There are several warning signs present that you shouldn't be driving.
My text to emoji ratio has gotten a little out of hand.
A little.
Yep, I'm definitely gonna call a ride home.
First time I tried Vicodin, it was laying around my mom's house. I didn't know they'd be this addictive. I didn't know how far I'd go to get more. Opioid dependence can happen after just 5 days. Know the truth, spread the truth.
Welcome back to Real Men of Real Estate. Today we've been talking about title and title insurance and title companies. With our guest, we have Brian Fox with Fox Real Estate Group from Orange County. We have Patrick Kappel. He is with Reef Point Realty and Reef Point Investor Club. And Fred Eckert with Chicago Title. And Fred, kind of give us a wrap up, because we talked a little bit about title companies all are regulated with the same fee structure. They all kind of provide the same services, but there's a ton of them out there. How do we know how to choose the right one?
So the biggest things I would tell you is this. You should ask this question. Is it a direct insurer, like a Chicago Title or a Fidelity Title, that kind of thing? Or is it an agent, title agent? You typically find those as being a part of a real estate brokerage company. Okay. Berkshire Hathaway has California Title, Coldwell Banker has Equity Title, and so forth. The next thing is, if it's a direct insurer, find out what their financial strength is, their ability to pay claims. And I've often said this, if I was a buyer, and I was dealing with an agent who was going to recommend a smaller company, I would want that seller to sign something that said he realizes that he's giving me a policy that's not a direct insurer, an agent. Because if I have to file a claim, it's going to be much more difficult.
So you're basically having them accept liability if that policy's no good.
Whether they want to do it or not, I'm just saying, if it was me as a sophisticated buyer, I'd want to do that. I'd want to know that I have a title insurance, direct title insurer, like Chicago Title, instead of a title agent. And I'd ask them, if you want the title agent, and most of the time it's really the real estate agent that is giving that advice to the seller. So, but I think that's important.
Okay. So let's go around the table. I want to get kind of final thoughts or things that we didn't get out that we want to share about title. So Brian, you go ahead and start.
Sure. So, in my experience, like I said, most title insurance policies are, the system is made so that it's just very simple. There's not a lot to deal with. It's kind of A, B, C, and allows you to go. But I think it is important to at least get somebody working with you who does understand the paperwork. There are title companies I've worked with who don't understand their own paperwork. So I think the biggest thing is, like you said, finding somebody who knows their own product.
Okay. All right, Patrick?
Yeah, Fred and I were talking during the break that if you're buying all cash, it's a little bit different. You still need to get that owner's title policy for yourself, but you don't need that lender's policy, so you can save there. But I think the big picture takeaway for all the buyers out there is when you're buying real estate, you've got a football team of people working for you, and your agent, the one that you see, that's the quarterback. He's kind of managing, or she is managing everything for you, and probably the only one you might be talking to. But realize there's a whole team, not just escrow, not just your home inspector, but also your title company, that you need to win the game of buying real estate.
Yeah, and if you have an agent and you have a question about your title policy, go back to your agent. That agent should be able to call somebody like me, and I would review that policy and call the clients and on your behalf, of course.
Okay. Fred, give us your final thoughts.
I guess my final thoughts was it's a pleasure to be on here. I loved talking and meeting with these guys and you, and of course Marie, who's watching from the side. So
That's our executive producer.
I'm happy to work for Chicago Title. I've been with them for 26 years. I don't plan on retiring, and I'm glad it's such a great company, large company with ability to pay claims. As I said, I worked on claims myself and sat there and made sure things got done.
And Fred's a Navy veteran helicopter pilot.
Yes,
Very
I
good.
am.
So you got a couple of Navy vets there. Very good. Yeah. All right, so I'm Steve Matley, your host for today, and I want to thank our panel that's been with us today. Brian Fox with Fox Real Estate Group, and we have Patrick Kappel with Reef Point Realty and Reef Point Investor Club, and Fred Eckert, he is with Chicago Title, who's been apprising us on title today. So in summation, title is what you need to make sure that you actually own the property you think you own and own it the way it's supposed to be owned. And the lien holders that are on there should be the bank, the lien lender, and of course the tax assessor will be on there too. Right. And anything that's on there that you don't recognize should not be on there. And title insurance helps to make sure you won't have any nasty surprises down the road. So you need to have a good title insurance company. Go with a actual title insurance company, not just an agent, and make sure you get it done right. So for Real Men of Real Estate, we'll be back next week with another episode. For Fred and Patrick and Brian, this is Steve Matley saying we will see you next time on Real Men of Real Estate.